Well, let's now get across what we're seeing globally with equities, and James Whelan joining us now from Barclay Pierce Capital. James, welcome, and go Spurs. You had to do it, didn't you?
I actually had it on, but it was going to ruin the microphone. I didn't want the production team not being able to hear.
Well, Ange Postecoglou has actually delivered.
He's got a record. I'll tell you what, you can't beat seasonality, and a trend following is one of those things, just to make it related to what we're talking about.
You're talking about soccer or stocks?
Every second year, Ange is at the helm, he wins a trophy. And he's done it again. Isn't that phenomenal? But well done to the guy, and well done to Australia as well. It's a great day for all of us. It doesn't matter which team you support. One of our owners gone out there and done it.
Well, we shall see if he survives in that position.
A proud day to win the Europa League. Just had to check
right.
what that is. But,
let's focus on the job at hand, though.
Yes.
With what we're seeing in equities at the moment, look, those US equities taking a bit of a tumble overnight. Obviously, there is concern about that massive debt position in the States at the moment.
There's some real doozies that are going on. I'm not going to be the best equipped to be able to cover that. Amazingly, I'm going to give full credit to our chief analyst, Jack Colreevy, who's been on here every now and then, but he has put together a beautiful summary of exactly what's going on with regards to the tax bill, where it's going to impact debt. All I can tell you is that the market's screaming out, just saying it's too much and something's got to give. Yep. And you've seen this happen with the bond market, and you've seen the shudders that are happening on the bond market. I'm going to try and get through today without talking about Japan, because what's going on over there is there's red lights flashing over in the Japanese bond market as well, for a set of entirely different reasons that are also related too. It's funny that it is a little bit annoying just talking a bit behind the curtain on this one, but you put your notes together and you have your plan and everything like that, just saying, look, the market's a sell at this particular time, and then it comes off and breaks its uptrend and this. And so I come down here, it seems like I'm sort of talking as if it's already happened. It has already happened. If you ask
got to
me
do it in real time.
I know. That's just. But such is the way. If you want to talk about the real reasons behind the whole thing, yes, you've got the tax bill. Yes, you've got all of these things. But I think that underlying all of this as well is the fact that you've got the Liberation Day and what started there. Let's cast our minds back, because I always like to take it back and talk through this journey. Trump was elected. Everyone was doing the dance. Remember that? And the markets were it was great. Economic stability. Markets were growing. The market was ticking on beautifully as a great representation of that as well. Trump was just going to do some very nice sort of things, talk about maybe deportations, which most people were in favour of doing that. Maybe talk about continuing a hard line on China. And he's come out and he's basically ruined all of that goodwill with blowing the whole thing up. What he's done with the tariffs is then just sort of an unnecessary insanity that has gone against everyone, but he's brought the tariffs in. The tariffs have, whilst yes, you can turn them on and off like a tap, and he sort of did that, and the market's rallied off the back of it. You're now going to see the ramifications of the fact that they were in at all over that period of time, and that things couldn't hit the shelves quick enough.
Well, and that goes to the retailers. Right. Well, look, hence here we've heard from Donald Trump, because Walmart last week warning they're going to have to hike prices.
Yes. And so they're saying it. So and technically everyone is going to have to hike prices, right? We know that tariffs are inflationary. You can't argue any other way. I won't even talk to you if you do. So now Donald Trump is talking about, we can talk about the insanity of having price fixing, but you can talk about underlying this as well. And what happens is that technically Walmart can sort of eat a lot of the price increases through their margins. I'm not saying they will, but they can. Small businesses can't do that. Now, we've already seen bankruptcies rise in the US. I think I was here last month talking about what was going to happen. The fact that people can't get things on shelves quick enough, or they just physically can't get things on there, is not. So now what we're seeing, now we've seen the market rally, and this is good. I'm going to paint this picture, just stick with me, it's all right. We've seen that retail have been the biggest buyers of this market, with 36% of the share. Retail market share is 36, which is up to record highs. It was on Bloomberg the other day. Frank Monkham, retail accounted for 36% of all trading volume today. Now he sees it as being retail learned the hard way in previous years not to miss out on these jumps, not to miss out on these dips, and they're buying it in more exuberance than they have before, and they're getting left behind on previous stock recoveries supported by policy puts. There's almost, quote, an unwavering commitment from retail to never make that mistake again. I think that is quite funny, because we all know, and historically, that retail is not the smartest money, and they're not definitely on the cutting edge, and they're definitely the weakest hands when it comes to it. Shaky. Now, the expression which has been used a bit, especially around our places, don't wrestle the pig, because you'll both get dirty, and the pig will like it. That's been going around in my head a lot. That right now, retail are wrestling the pig.
Yeah,
that's what they're doing. On the other side of retail, getting insanely long at record highs, is that we've seen that hedge funds have added at least $25 billion of short equity futures over their last commitment of trade reports.
Gee, that's very illustrative right there, isn't it? That spike.
They're dumping in, and this is only recently, right? So it's definitely charging in. It goes up to just a couple of days ago. That's them just going. You know what? We think it's a short term. This is before last night's little correction. That's them saying that we think this is coming off. Not only the deficit side of things, not only the tax side of things. I think also more about exactly what's going to be coming up in the next few months of more and more small businesses having to wind up and more outflow from the small cap space. But it's just that's the underlying backbone of America. That's mums and dads.
So as a result, what are we seeing, particularly those forward PE ratios then?
Yes, so I think that when I was on here last month, I was talking about how low they were and how it was a screaming buy around at 18 times forward PE for the SPX. Now we're back up to almost 22. You're done. I don't think that there's any reason to be buying here for that until you see something change in those regards. Now, yes, we've seen earnings, and earnings has been strong. It has the prices have come in to accommodate that. Now they're saying that it's at 22 times forward earnings. Like I said, that's too much. So if you just want to talk of basic valuation levels, the market is not a buy here.
Meanwhile, that relief in short cap land, in small cap land, was relatively brief, wasn't it?
Because it's got the best leverage to go into. So the Russell 2000 was a screaming buy. However, this came out. Now someone's jibbied with this thing. Now either Bank of America have jiggled this, or the person that posted the chart has jiggled with it as well. But the small cap outflow is predicted by Bank of America to be about $68 billion. That's which I can absolutely believe happening. I've got no reason to think that that's not the situation. Physically, I think that the small caps is not the space to be in America unless, here's the thing, if Trump says, I'm sorry, I completely stuffed it up, unwinding the entire situation, everything's all right, you still did not get your stuff on the shelves quick enough for 4th of July. You didn't get them in the boats. I mean, you only got a certain number of iPhones into the air, but and we talked about this 4th of July thing, you're not even ready for Halloween, you're not even ready for anything. If you're in the business of selling stuff to America, and let's keep in mind that America is a pretty significant consumer economy, what is it, 66% of their GDP comes from the consumers, which it means technically 15% of the world's GDP comes from the US consumer. If they're not being able to buy new deck chairs and sparklers and all that sort of thing, but also just real stuff that you wanted to have on the shelves because it's that season, summer's coming, let's go and buy some things, let's redo our house. If you physically can't get stuff, then it means you can't do those things, you can't employ the people to do those things that you want to do. You have to have a smaller party, host a smaller thing, have a smaller renovation, but also it means that the shops that were supposed to be able to make their money selling it can't actually do that.
Well, it goes to that balance, doesn't it, between particularly the US and China, where the criticism being, I guess that the Americans are consuming too much, the Chinese aren't consuming enough.
Well, it's.
But
no, tell an American that they're consuming too much and then find out what happens. You've had to find out about that Second Amendment real quick, mate.
All right, so meanwhile, we're seeing those bond yields on the march again.
Yeah, no, this is a real, pay attention to what the bond market did. Amazingly, and here's the hilarious thing, that the bond market, I'm going to come to this, it's freaking amazing. The bond market is now, I think the 10-year is now higher. Remember when Trump backed down from the tariffs the first time because the bond market was screaming, because the bonds were getting sold, yields were spiking up. It's now higher than where it was when he backed down that first time. So chuck it back up to the chart. This is a bit of fun. Andy Constant on Twitter, a fantastic follow. He put this together a little while ago that shows sort of where we're drifting around the sea. Now that star was put in a couple of days ago. You can move that star down. This is sort of where the recovery, he says the recovery or the continuing of what we're looking at right now. Soft landing island was almost there with the SPX, so the S&P 500. Yeah, touching it. We were almost landing on soft landing island over there. Deficit beach is probably where we're going to be looking at right now because the 10-year note has actually gone to wherever it is, 4.5 something now. So move that star downwards and now move that star a little bit to the left. And we're starting to the Normandy invasion is coming up on Deficit Beach, and there ain't no machine gunners up on the hills, my friend. Right. Okay, so but I like this thing because it's very interesting about where it actually is and where it lands.
All right, as a result, then you are not a buyer of the market. Are you continuing to like gold too? As
obviously, and it's the next natural thing to go into.
Yeah.
Gold is fantastic.
Or Bitcoin.
Hey, I'm long Bitcoin. I've got no problem with that. And if you look at Bitcoin, actually, there was another chart I was going to chuck up here about Bitcoin and M2 money supply. There's a 10-week lag between them. And so if you put two charts over the top of each other and just go M2 money supply in the US and then 10 weeks later what Bitcoin price does, they're exactly correlated. And it shows now that the M2 money supply has gone like that. Bitcoin is obviously set to move, provided that you think that, thank you, Ange, for backing me on this one, that, the sort of seasonality and trend following is the thing that you should do.